Welcome to Savings Guru TV. I'm delighted to be joined once again. Welcome back.
Thank you very
Will
much.
Davies, Head of Savings at Kent Reliance, which is part of the One Savings Bank. Today we're going to chat through a number of things. There's been quite a lot of developments in the market recently, particularly on the easy access. We've seen Marcus come into the fray. We've seen Nottingham Building Society launch an instant savings account that gets pulled within 48 hours of launch, paying 1.55, so beating Marcus's 1.5. Yourselves have launched recently your own one, paying 1.4, so
Yep.
Very competitive market at the moment. What do you think's driving that?
I don't think this is anything new. I think interest rates have been eking upwards for the past year, 18 months, and we've been expecting to see easy access around the 1.5, 1.65% mark by the end of 2018. So I think Marcus did a really good job at kind of jolting that, and kind of adding, they launched their 1.5 when the best in the market was 1.37, 235, So suddenly they kind of added a lot of testosterone to the market. But they have been going up kind of gradually since. Yeah. I think we still need something else to really disrupt the market, because 1.5 versus Kent Reliance's 1.4, the difference is only £1 return on every £1,000 invested. So is that really a significant disruption to the savings market? I think it's good news and I think customers benefit, but I'm still waiting to see a really significant disruption, and whether that's on rate, whether that's using technology, whether that's on service. I don't yet know what it's going to be, but I think the next big thing is just around the corner. There are too many new banks now. There's too many of us all fighting in the same space for there not to be something different around the corner.
So you think there will be a breakout, something a bit unique coming fairly soon?
Yeah, absolutely.
Any ideas on what then? Put you on the spot?
Oh, God. I think we're at a point where artificial intelligence and machine learning are now well-established technologies. So why can't my bank create an account which works perfectly for me? There's enough data about me online to say I'm this age, I live in this house, I've got a mortgage of this size, yada, yada, yada. Why don't they say, actually, we don't think an easy access account is best for you. We think this portfolio of accounts or this really bespoke account for William Davies is for you, and then you have one for James Blower. And I think there's the technology available to do that, and it may be that I don't want a good interest rate, but I do want lots of access, or I drink a particular coffee brand quite a lot, and could they use that data to create something for me which is more of a lifestyle product rather than just a savings product? And obviously with open banking, that's just becoming that much easier.
Yeah. It's interesting you say that, because another pretty big development recently has been Monzo coming to market in partnership with Investec. So they've maintained that they wouldn't do savings themselves, and they've stuck to their word, and they've gone with what they call their marketplace and partnered with Investec to provide those savings pots. Possible sign of things to come, that kind of direction, you think, maybe bulking it up with a number of different marketplace services? You think that's where we're going?
Yeah. So, Monzo came out, was it 6 months ago, with their beta marketplace, and there were 3 or 4 different banks on there that you could choose from. Now, it was quite a difficult process to go through. It wasn't very user-friendly, so I think they withdrew that and then just decided to focus on Investec. I don't know, I haven't spoken to anyone at Monzo, but I think the next step is Monzo and Starling and all the kind of neo-challenger banks will suddenly have links with Investec, maybe with us, maybe with Aldermont, with lots of different banks, and then you as a customer will go, I'll have that one, and that one. In fact, you might not even get the choice. Monzo might just say, we've looked at your data, we know how you spend your money, swipe right, a bit like a Tinder for savings accounts, swipe right for the best savings account available for you. You'll swipe right and you'll probably get a smartphone message to say, thanks very much, you're now earning £10 a year extra in your interest. And I think that's going to take us from it's all about interest rate to it's all about convenience for customers. I think that's hopefully where we will see the market going.
I was surprised by the partnership being with Investec. So I was expecting to see a more well-known, say, challenger bank, whether that be an Oldham or whether that be a Shawbrook or Charter Savings or someone like that. So, but I was surprised it was Investec that they launched with. What did you make of that partnership?
Whilst obviously I know Investec do retail savings, but I always associate Investec with high net worth, kind of more investments rather than savings. So it did surprise me. I was expecting one of the really small challenger banks to go and work alongside them. Someone, even someone like, I don't know, Oak North, or someone who, I don't know what Oak North desire for balances is, and maybe Monzo having 750,000 customers might have put off some of the smaller banks because they may have suddenly been flooded with cash that they couldn't lend out or they couldn't utilise. But yeah, it was. Well, I wouldn't say it was a shock that it was Investec.
No,
but it didn't seem like the marriage I was expecting.
They've certainly been more active in the savings market recently, but they have also had quite high minimum balances relative to their peer group in that space. So, you mentioned that that the floor is £1,000 with Monzo, which that's significantly under what they're competing at in the fixed rate deposit market. But possibly a marriage of convenience there in terms of, I expect Investec wouldn't have wanted small amounts. They wouldn't want people transferring 20, 40 pounds into pots. So want to filter out that bottom end. But equally, £10,000 as a minimum probably would have been too much for many Monzo customers.
And I don't know how much cash will be flying to Investec, because let's face it, Monzo are more erred towards younger customers, and sorry, younger customers, but you typically have less money than older customers. So they're probably not seeing money fly through the door, I wouldn't have thought, but it's probably really nice. Let's get an established relationship. Then in a few years' time, then they'll probably start seeing more money coming through. Because Monzo, let's face it, it's a current account. People don't leave a great deal of money in their current accounts, traditionally. So they won't, I doubt they're seeing huge flows of account opening, but who knows? Marcus opened 100,000 accounts or something like that in a month.
Yes. So. They've really flown, haven't they? I guess I think one of the things I really like about Monzo is their transparency and how open they are. And some people would say they're too open, even to the extent of sharing their brand guidelines online.
Savings roadmap and things like that.
Those sort of things that we know exist in other institutions, but not something that is very often shared. Certainly not put on a website, and I think that's tremendously admirable.
Yeah, I like it.
So I wonder, they may well share some of that data, or we may even well get them on Savings Guru TV to see what they're planning to do.
Fingers crossed.
Yeah, you never know. But it'll be interesting to see whether they
Are you a
do
Monzo
share.
customer?
I'm not actually. I've played with the functionality and seen it when it was a prepaid debit card, but no, I haven't switched.
Right, okay.
I haven't switched over and had a play. But
I am really. So I've got the Monzo account. In fact, I had the Mondo account when my card was a Mondo account, but I lost it.
They were collectors.
Yeah,
piece,
no, I lost it.
Yourself.
I was really annoyed. So I am a customer of theirs, but more I put 100 quid a week in for shopping and things like that, and it is just so easy to use, and it's so nice. In fact, I was in Norway, and I was going to pay for my meal on my Monzo card, and my card declined, and I quickly checked it, and I didn't have enough money to pay for the meal. So just using Apple Pay, I put some more money in the account and went to pay and tried it again, and she was like, wow, that was quick. And that's Scandinavia, where you think they've already got all the really cool stuff in place. It's like, actually, that was a really easy service to use, and I think a lot of banks can learn a lot from that. So I think going back to the Marcus and being a disturber of the market, when they start being able to do that wow factor, that's when I think the real disturbance will come. Yeah,
I think that Monzo started quite quietly. I thought when the kind of new wave that they're in, Atom did very well in the run up. Monzo were much quieter, but I certainly think they've gone completely in parallel, completely opposite direction since then. I think Monzo have been superb, and I think Atom have kind of faded away. But they're really real momentum behind them. It's now whether they can convert that enthusiasm. You mentioned that you don't use it as your full current account, and that's a challenge.
Yeah, how are they going to persuade me to move everything over to them? And to be honest, my big bank, they do most things. I was in Tesco's a few months ago, and I was buying a sandwich, and the guy behind the cashier said, "Oh, that's a Monzo card. Oh, I'm on the waiting list for one of them. I can't wait for it." And it kind of got me thinking that it's just a card. It's just something I use to buy sandwiches in Monzo. There's no reason to be that excited about it. But this guy was like, it's like there's a cult of Monzo.
Yeah, it is. I went to watch Billericay play Dulwich Hamlet at Dulwich Hamlet's ground.
That must have been enthralling.
It was Billericay 1 actually, and the player we sponsored, Jake Robinson, scored a goal of the season. So it was a good game. But what the thing that struck me was behind the bar, everyone was paying with card payments. And I would have said every other time was a Monzo card.
Right. Okay.
Obviously, you can't miss the what they lovingly refer to as the hot coral. Right. Can't miss the colour.
Right. Yeah.
It's so distinctive.
Is that Billericay fans are just that little bit of?
I think it's the Dulwich fans to be fair. Quite trendy.
Yeah.
I think they've done astonishingly well, and I'm really interested to kind of continue to follow their fortunes and see whether they can make it. They've certainly got momentum behind them. I guess the detractors will say anyone can make something that's successful that doesn't make money. But I don't agree with that. Actually, I think they've done very well to get where they are. But the key now is can they eventually transform that into profitability?
Yeah. And because they don't, one of the problems I have with this kind of disintermediated savings, platform savings, is so if they offer Investec and then say 3 or 4 or 5 other banks, then are those banks offering the best customer outcomes for all of Monzo's customers? And Monzo would probably argue, well, we're not forcing the customers to use them, we're just giving them the option. And that's fine, but it feels like you're making the customer's world that little bit smaller, and they're choosing from a smaller range of accounts rather than going to all of market. And again, the customers can do whatever they want. It would be nice if you went for these products. We'll make it really easy for you to go for these products, and Investec is 1%. And if you're going up on a Marcus account, you'll get 1.5%. So you can get considerably more if you look elsewhere. And that's not about Monzo. That's just about the whole platform savings.
Yeah.
That looks like it's probably going to kick off, and it's just having the best outcome for customers is where I'm slightly concerned.
Well, it's interesting you mentioned that, because obviously the FCA have just kind of closed the initial round of consultation on their price discrimination.
Not consultation yet, discussion.
Sorry.
Consultation will start next year.
Initial discussion round on price discrimination and their outline proposal on potentially a basic savings rate. So they've considered that they've made some efforts to try and sort of highlight remedies for customers to improve switching that haven't been successful. So now they're going to at the other end of the spectrum and seeing if they can, and what else that they can do to encourage the providers to reward customers and look after customers better. The main finding at the moment being the potential for basic savings rate. What were your thoughts on that? Do you think they're going in the right direction, or do you think we're going to end up with unintended consequences?
When I first heard about it and didn't really read it, just read the headlines, I thought, brilliant. This is a way to force us all to offer an excellent rate to customers, because we, as you know, have our policy of long-term value. We don't always offer the best interest rate, but we always offer a fair interest rate, no matter how long you've been a customer of ours. And I thought, great, this is forcing everyone to do what we've been saying for a long time. And I was going to march into my CEO and say, look, everyone's copying us. This is great. But it's so restrictive. You have to move them after 12 months, the customers after 12 months, and you have to move them to a single rate. So if you've been a customer, so we try to encourage loyalty. but actually there is no loyalty. If after 12 months, which is quite a short period of time, I have to put you on a lower rate, how am I saying, well, actually, if you're with me for 5 years, I'll put you on an even better rate?
Yeah.
And it's removed the option of paying customers for their loyalty. And I can't help but think there's an element of sledgehammer to crack a nut. So you've got a lot of your current account providers who do attract customers on one rate, and then 2 years later they'll be on a much lower rate. And those current account providers will say, but those customers have much wider services than you get from a savings account provider, which is true. They've got a good app, they've got 24/7 contact, they've got thousands of branches that they can have access to. So they have to pay for that. So they're offsetting some of their interest rate for the additional services they get. But if you come to us, you don't get a 24/7 contact centre, you don't get an app, maybe just yet, we're hopefully going to have an app very soon, but you have less functionality, but you get a much better interest rate. So I think by forcing our customers onto a basic savings rate, which will no doubt be lower than what the customers are already on at the moment, you're forcing our customers into a worse situation. And I don't believe customers want to be looking for a new account every 12 months, because that's what they're trying to do. They're trying to force customers to switch their accounts every 12 months. Yeah. And I don't think customers want that. I think customers just want long-term value. And they can have long-term value. Come to us. I'm sure most of the savings providers offer reasonable interest rates for their loyal customers, but they have to leave their current account providers to do that. And if you leave your current account provider, you lose some of the convenience that your current account provider offers you. But it has to be the customer's decision. It shouldn't be the FCA determining how the customers should be treated.
You mentioned earlier about the difference in rate being a pound on £1,000, and you were discussing the easy access accounts. Do you think that's the issue, that we're actually there isn't so much an issue for customers? They're actually making a conscious choice that there just isn't enough incentive. So we get carried away and excited. So someone comes into the market with big appetite, 1.5%, and then 1.55%. But actually, customers, are they looking at it and going, still not worth my while? Does this potentially go away in a rising rate environment where maybe customers will then have an incentive? If we got back to the days of 3 to 5% on easy access, do you think we might then move to a situation where customers say, actually, behaviourally now there is an incentive for me to move? Actually, it's not a pound benefit, it's £100 benefit to switch, and therefore actually that's worth me taking away. Interesting, the current account market, it seems to be around £150, £200 as a incentive, bribe, call it what you will. It seems to be about a tipping point when you look at the current account
that's true.
figures. So I do wonder whether potentially the issue may go away in the longer term if we start to move into a higher rate environment.
Yeah, and I think customers will be much more likely to switch. You're right. You put £100 difference, then you're like, actually, that'll pay for my gym membership for the year. That's worthwhile going. Or a couple £100, that pays for my mobile phone. It becomes more tangible. Then you get £15 a year difference, whether you're with Kent Reliance or Marcus. Is there a lot of value in changing? Unless they're offering different services and things like that, then £15 is £15, but it's not life-changing stuff.
Yeah. Obviously, a couple of weeks back we had the budget. Not a lot in there for savers this time. Yeah, not particularly exciting, but some interesting things for NS&I. They've managed to get their funding window increased by $3 billion, which is reasonably significant, and some reductions in terms of minimum stakes for premium bonds, and also a widening of scope of people who can go in for it. Now, I've certainly felt that they pay on a prize rate of 1.4%, and that looks quite generous until recently. I've felt that might come under pressure, but now looks like they may have a bit of slack there, and perhaps that will hold firm. Still their most popular product. I think it's nearly half their book is now premium bonds.
You see, the thing is with me for premium bonds, so premium bonds have a very special place in my heart, because I probably work in savings because of premium bonds. And I remember my mum made us, I can't remember how old I was probably 6 or 7 or something like that. And once we'd saved up enough money from doing chores or birthday monies and things like that, when we got to, I think it was 50 quid, my mum marched us down to the post office, and it was a bit ceremonious. We all had to get together. My brother did it when he got to the first 50 quid. My sister did it, and then I had to do it. And I didn't really understand what a premium bond was. She told me I have to put some money to buy it. I know I had to hand over this 50 quid, which I'd just been saving for like the last 2 years, and I didn't really get it. But she really got into that whole, it's about putting money away for the future.
Yeah.
So for me, premium bonds are a bit more of an educational piece. I think if you can get kids into premium bonds on the chance that, you know, you might walk away with £1 million if you just put this money in the account, and it's like, God, these are cool. I really want some more of these. Because from then on, I just started saving all my money. I remember I got to kind of 16, 17 years old, and I had a few £1,000s in the bank, and not many 16, 17-year-olds have got that kind of money in the bank, but it's just because I just constantly saved everything I could ever save. And so now the fact that they've dropped back to 25 quid, I just think it's really wonderful.
There's definitely a romanticism about premium bonds. I think wherever you work in the financial services sector, if you're involved in savings or investments of any scope, whichever range on the risk weighting you are, everyone seems to love premium bonds. I wonder if it's culturally, or you talked of your experiences there. Mine very similar. I grew up with going down to the post office to pay money in, and I wonder whether it's now that we're starting to join that generation that is the savings kind of target market, and that's kind of what's fueling this growth of
probably
a little bit of romanticism about that speculative hope that you'll be one of the £2 million prize winners.
What did you think about the budget? Was there anything in the budget that surprised you?
I think the thing that surprised me, probably that wasn't there, was I expected to see a bit of consolidation on ISAs. I think we've got too many now for a product that was introduced. Really, if we wind right back to, it's nearly 20 years now they've been around for. If we wind back to the beginning of ISAs, it was all about simplifying savings, encouraging people to get into the market, and that has been eroded in the last few years. They've become much more complex with the varieties that are there, and that simplification has gone. And I thought there may be a little bit of consolidation of saying, well, actually, we're just going to rein some of this in again. The LISA hasn't been the raving success that the government hoped for.
Do you think they'll ever change the terms? So the LISA, £4,000 a year you can put into it, which is clearly a good chunk of cash, especially for a younger person saving up for a house or whatever. But do you think they'll ever increase that? So you can put 40 grand a year into your pension and you get tax relief on that. So do you think they'll ever increase the amount that you can put into your lifetime ISA to maybe match what you can put into your pension, to try and persuade people to save for the longer term?
I think I'm concerned that you've got two different savings purposes there, and I'm concerned that people are using it to save for a house, but then don't buy for whatever reason, or can't afford to in the end, or something happens.
Suddenly can't have the money for it.
This is my concern, and it's and those that maybe are putting it, where should they be doing a pension instead, which is the investment industry's concern. If you're saving for the longer term of sort of 5 to 10 year plus horizon, then I think we would freely admit that cash savings isn't the most effective vehicle based on historic performance for that. I'm concerned about the slightly mixed message, and I do wonder whether that and the kind of lack of consultation is part of the reason why we haven't seen many providers in the market. We've skipped some where they're only one until very recently. Newcastle are in now, Nottingham are in now, but it's that can't have been the plan when the Treasury laid out its proposals that we'd only have three cash providers for that product. If you look at cash ISAs generally, how many providers are in the market? Nearly everyone's in it. I can't believe that was the intention.
I wonder how many of the Skipton, don't they have like 150,000, 160,000 customers who open the lifetime ISA? I think I read that on the BSA's website. I wonder how many of them have opened it to buy a house and how many of them have opened it for their pension.
Yeah.
Because in which case, only 1% a year on a pension isn't much.
I'll have to get Chris on to ask him.
Yeah, for sure.
We'll have to find out, see what he's got to say.
But it'd be interesting to see how well people like Hargreaves Lansdown and the investment guys, because I opened my lifetime ISA with Hargreaves Lansdown. It'd be interesting to find out how many lifetime ISAs they opened. Is it more like 300,000, 400,000? I don't know, because
you hear them comment very little on it, and Hargreaves Lansdown are very good on their PR. I think the fact they comment very little on it probably suggests to me that it possibly hasn't been very particularly popular for them either.
I wonder if Nottingham only opened it in a branch.
Yes.
And how many lifetime ISA customers want to open in a branch?
Probably not that many.
No.
Although they have got 67 of them, to be fair.
So have they?
Nottingham are a little bit more. Have been
67 branches?
Yeah, they're
I think meant 67 customers.
No. They may only have 67 customers as well on the LISA, but no, they've got quite. Nottingham have picked up some of the Norwich and Peterborough branches, so it's quite an interesting strategy that they've chosen to branch out into further branch expansion at a time when many places, apart from yourselves, who also have expanded the portfolio, but most places are looking at scaling back on that. But yeah, perhaps we'll have to have a chat with John and the Nottingham as well.
I'm sure John would love to come and regale you with his tales of lifetime ISA.
Well, thank you very much for your time today. It's been fantastic I always enjoy chatting savings with you. So thanks very much for your time.
My pleasure. Thank you.
And I'll see you soon.
Cool. Cheers.
Cheers, Will. Thank you.